I get more and more videos every day about really negative outcomes for markets. But here's what you need to know before the bell this morning. Despite all these videos that are coming out talking about kind of the end of the world, the market's going to crash. I saw several just from 2 or 3 months ago. People have been emailing me lately. The markets are going to crash by the end of the year. The economy is going into a massive recession. This October looks a lot like October of 2007. Maybe. There's plenty of headlines out there. If we go back to the soft landing scenario, you go back to 2007, lots of headlines back then talking about, hey, it's a soft landing, Goldilocks scenario, Ben Bernanke, right? All that. And so, yeah, there's certainly a lot of the similarities between the two markets in terms of headline events. But again, the market right now isn't suggesting any of that. We've been continuing to make new highs here lately. The market's continuing just to kind of grind higher along this bullish trend line. And again, we keep kind of setting a rising trend to the market that's very important. And again, we're on a buy signal right now. Now, stocks are a little bit overbought, and this is the subject of today's daily market commentary, which will be out in just a few minutes on our website. It's actually live now. If you go to realinvestmentadvice.com, it'll be emailed to you at 7:30. But we talk about the fact that you can have a very bullish market in terms of we have a seasonal buy signal in place on a weekly basis. We have a market trend that continues to be very positive. We continue to just kind of set higher lows as we kind of go up. We are getting a much more defined kind of ascending wedge in the markets as well. Eventually the market's going to have to break out of this in one direction or the other. But the trend of the market is still very bullish. But with that same context, right, you do have risk. We are as we talked about previously, we are getting very deviated from the 50-day moving average. With the MACD buy signal here is at a very high level, which suggests that a correction is very likely possible. So we continue to suggest, managing the risk in your portfolio right now. Don't just, go reckless abandon into the markets, but there's also no reason to be overly bearish about the markets. One thing we're going to talk about with Michael Leibowitz this morning is this rise in the VIX that we've had just recently. And really, what is that signaling, if anything, right? But again, when the VIX is rising, everybody starts coming out with very negative headlines. Oh, the VIX is rising, a market crash is coming. Maybe. But see, this is the trick to managing money, which is to understand that the markets will trend higher until they don't. And again, you're going to have signals that come along that tell you that risk is becoming elevated and that you need to be more aggressive about your risk reduction. We're just not currently in that environment right now. The markets are trending fine. Buyers and sellers are well aligned. Plenty of liquidity coming into the markets right now. Global liquidity on a relative basis is at some of the highest levels that we've seen really since the financial crisis. It's just been a very, very sharp rise in global liquidity, which is all fueling into the markets around the world because there's nowhere else for the money to go. So again, remain positive right now. Continue to manage your risk because we do have some short-term risk that the markets could pull back here a bit, which would give you a better entry point to add money into the end of the year. But again, also November, December, we have buybacks coming back. Earnings season will be behind us. And again, it's kind of that end of the year holiday shopping push. So lots of reasons why markets tend to rally into year end. And a lot of portfolio managers are trailing markets this year. They're going to have to play catch up by year end. That's going to help push markets even higher through that point. That's what you need to know before the bell this morning.